It all started back in 2007, where the first MTFs popped up in the marketplace. Now, 10 years later, we have a very fragmented market with some instruments where there are more than 50% of the trades taking place outside of the previous national exchange. So right now, I would say it's imperative for firms to utilize the SOR in order to capture the complete market. The first reason would be speed and predictability. And what I mean with that is that our solution delivers extremely fast market data and also predictable market data. That means that the SOR can take its routing decision based on market data that is valid and timely. So the better market data you have in the SOR, the better routing decisions the SOR will take. The second reason is traceability. That means that the owner or the operator of the SOR must be able to go back in time and analyze what went wrong with certain orders. It could be a suboptimal execution, for instance. So the operator of the SOR can basically go back in time, see what happened, and optimize or tweak the performances based on its findings. The third reason is flexibility, which basically evolves around the SOR being extremely flexible. That means that, for instance, you can write your own strategies to implement your own intellectual property and launch it within a trading day without having to restart the SOR or somehow disconnect the flow of orders. Another feature that we have is something we call Speed Core, which enables our customers to be able to optimize certain pairs of venues, for example, the National Stock Exchange, together with a specific MTF. That gives the owner optimum performance in that market pair. Also, what we can do in the SOR is to schedule certain amendments to routing strategies so that they are enabled after the close or before the open of the market. That means that you can work on the strategies during the business day and then launch them after the business day ends, basically. I see a number of things going on. First of all, we have many new venue initiatives coming up in the market, trying to add value to a post-MiFID market. We also have new and stricter implementation or rules for best execution. Both of these are something that the participants have to take into consideration when they set their routing strategies in the SOR. Furthermore, there are also the big debate about firms being SIs or not, and that also has considerations for their SORs, how they should treat this as SI in the SOR, and how they should interact with different kinds of flow using the SOR. So what we will see is probably a big change in how market participants act in the market, creating new trading patterns. We don't really know exactly what will happen after MiFID II, but we know that the market will become more complex. So in my opinion, I think you should have a nimble solution that enables you to cope with the changes that are being enforced by MiFID II and to be able to use that to deliver best execution.